Hey everybody, James Flint coming at you with Space Coast Assets from sunny Florida. Wanted to talk with you about a real estate investment deal. So instead of buying real property, I've been investing in notes for properties. And for those of you who might not be familiar with notes, basically that's the IOU that a borrower gives to the bank when they take out a mortgage on their property. Unfortunately, people don't always repay their loans, and so then the bank is stuck with a non-performing note. Well, this doesn't work very well for the bank, obviously, but it also means that the bank can't loan the money to somebody else. So instead of hanging on to it, they just want to get it off their books, and they're willing to sell it at a discount to an investor who might be more willing to deal with it. Well, that's where I come in. I buy the IOU from the bank, and then I reach out to the borrower to see if they have the ability to pay and if they want to stay in the property. However, sometimes they just leave the property and then it's vacant. Well, that's where I come in this property in Fort Pierce, Florida. This particular borrower was in default on a contract for deed. The difference here is that the lender owned the deed to the property rather than the borrower. He had been in default for a while because now the house was in foreclosure. County records showed a 3-bedroom, 2-bath, 1,263 square foot home on a quarter of an acre. There was a note payable balance of $48,847 plus 3.5 years interest at 10%. There were also back taxes due for unpaid property taxes in the amount of $3,150. There was also a big code enforcement lien from the county for $5,000, which I'll get into later. I noticed looking at other homes in the area that the median sale prices for homes was around $138,000. I figured the fair market value for this particular home, which I imagine wasn't in very good condition, was around $60,000. Factoring in the cost of the back taxes and the code enforcement liens, which I would inevitably have to pay, I offered a purchase price of $25,000, which was quickly accepted. So the one mistake I made with this particular purchase was that I never actually looked at the property or hired anyone else to look at the property before I closed. I didn't really know what kind of condition it was in, and I didn't even know if it was occupied or if it was vacant. So I hired a local realtor to go out and take a look and give me her assessment. And when she saw it, she suggested that I come down and make the 2-hour trip just to see it for my own eyes. It was a disaster. I've never seen anything quite so awful in my life. Turns out the previous owner had been raising pit bulls in the property, which also explained the $5,000 code enforcement lien. Evidently, 14 pit bulls had been living in the property and using the interior of the house to sleep, to eat, to defecate, and whatever else they needed to do. So needless to say, the stench was horrendous. Fortunately, I found somebody who was willing to clean it up, and as you can see from one of these photos, he's standing there wearing a gas mask. So I really have to hand it to the guy. He was in there for 3 days with 2 other guys, all 3 of them wearing gas masks the whole time while they hauled out all that junk. They filled up 3 separate dumpsters and hauled them away, and then they came back in and bleached the place from top to bottom. The difference was amazing. So I hired a professional photographer to come in and take some interior photographs. We listed the property, and shortly thereafter received an offer of $64,900, which we accepted. So when it was all said and done, my costs were as follows. The purchase price was $25,000. The cleanup and carrying cost was $2,750. I had $3,150 in back taxes, but I was able to get the code enforcement lien reduced to $1,000. There were a whole bunch of title issues to deal with, so I hired an attorney and paid him $1,800 to work through all that. Then the closing costs and the commission combined was $6,000. So at the end, my total profit was $25,200, or a margin of a little over 100%. So as you can see, non-performing notes can be a very profitable business model. Now, while the example here is extraordinary, I found that the returns are consistently better than regular real estate returns. If you're looking to increase your own returns by 2 or even 3 times in a relatively short period of time, feel free to give me a call. There are plenty of deals to go around, and I'm always looking for new partners. My number is 321-252-9090 or James at spacecoastassets.com. Thanks for listening.